today's topics for us is embedded finance and African inclusion, money remittances and beyond. And Rajesh is the founder of the project, which is initially has been built as a crowdfunding platform, but right now it's extending into the payment gateway. So can you give us a little bit your biography so we can give exposure to our listeners, and then we will go with the next questions.
I'm the founder of a company, a fintech called Indelible, where essentially what you would classify as a nature fintech company. The startup has been going now for 1.5 years, and our focus is very much about connecting businesses, consumers, and communities to nature finance. As you rightly said, initially we started life just over 1.5 years ago as a crowdfunding play. We developed a retail app which connected high-profile conservation projects across Africa predominantly to retail consumers. But in the last few months, we've done a slight pivot with a focus more towards developing infrastructure which will connect businesses directly to consumers and also to projects locally, simply because we feel that embedded finance is really, well, it's the present and it's the future in the context of Africa and impact investment.
I really like the term embedded finance. But before jumping into the more detailed, let's go a little bit into your biography. It's great that you have a startup right now, and being a founder is really, really taking accountability. So maybe you will give us a little bit exposure. What were your positions and what were you doing before? Because shifting into the founder and leading the startup, it's absolutely great idea. But what took you for that? Like what you have been doing before?
Well, actually, my background, I've been involved in startups, entrepreneurship, and in Africa for the last 17 years. I actually founded my first company, which was a remittance provider. I was actually living in Barcelona. So I left London, went to Spain, and started working for a Catalan tech startup. And then in around 2008, I had the opportunity of jumping into a new project with, I would call them very senior executives from Ghana and Nigeria. Mm-hmm. And they were working for the telcos, telecoms companies like MTN and Etisalat. And they just said, look, we would like to start an opportunity with you. And I literally quit my job. And my roots, essentially, my father and my mother are both from Kenya. Mm-hmm. And I think a lot of people may or may not know about the sort of history of Fintech as it was, or as it is. But really, Fintech was founded in Kenya through a solution called M-Pesa. Mm-hmm. Started in 2005 when the UK government decided to fund a financial inclusion deepening project with Vodafone. Mm-hmm. And then in 2007, they launched what essentially became the biggest mobile money provider in the world. So that was what really got me excited about this, my sort of parents' roots, and mm-hmm. this vast, amazing opportunity in a continent of 1.5 billion people.
And I see the influence M-Pesa because that's one of the biggest and most useful tool in Africa. And I would say that it works a little bit different from European and United Kingdom projects because we are not underserved as a banking services. Like literally you can open and you have a variety of options. You can go to the branch, you can open through the application, which is not the case for Africa. So we'll go a little bit deeper with the M-Pesa. But the question is around like the overall infrastructure Africa. Like what do you think by being in London and then moving to Barcelona, like you have an exposure to European and United Kingdom market. What is different for average customer in Africa? Like what are the challenges that you are facing every day and what are the advantages maybe that you have compared to other regions?
No, absolutely. I think with Africa and any emerging market, what differentiates opportunity and challenges in these markets is the lack of infrastructure. So, you have 1.5 billion people. 65% of them are under the age of 25 years old. In terms of banking, traditional banks, around 300 million Africans are banked. But then the challenge for traditional bricks and mortar is many things: security, access to credit, ID, all of these issues. So that's where the telecoms companies came in and really have dominated the payments landscape with something called mobile money, which essentially is bankless. And in terms of the numbers, if you look at something like GSMA 2025, there are 2.2 billion mobile money accounts globally. Yeah. 1.1 billion of those are in Africa. So that gives you an idea of that. And it's a $1 trillion economy last year. So mobile money has leapfrogged and delivered solutions that are not normal here in the Western world.
And why do you think like it's evolved another way? It's like I don't know, growing a plant. You have the similar seeds, and then in the end you're getting the different structure. Why do you think it's happened like this way?
Well, the ubiquity of mobile phones. I mean, if you were to travel to Kenya or Ghana or Nigeria today, people that have perhaps they don't earn much money, maybe $1 a day or less, an informal economy, everyone will have at least one mobile phone, probably two. They will all have two SIM cards. So what you're essentially, what's happened there is you've accelerated the opportunity for the underbanked or underserved to have an opportunity to come into the financial inclusion. And I think that's the biggest driver for people like myself, but also a lot of innovators in across Africa are trying to develop solutions now to jump onto the mobile money rails.
What do you think, what is the key difference? Because here we have operators and actually ability to do the telecom like balances and then use them as a banking is not relatively like positive here. Like people are not using, they're not withdrawing, even though in certain countries it's possible to use money balance as a balance, like to withdraw to your account. What do you think enabled that in Africa?
M-Pesa enabled that in 2005. As mentioned, they initially started an experiment on how can we deepen financial inclusion. So what was then called DFID, UK Aid, which is now part of the Foreign Commonwealth Development Office, they launched a project. They raised or invested 2 million. And initially the project was all about financial inclusion, but they weren't sure how because people were using USSD, SMS. Within a few months, they realized that people were not using it how they perceived it would be used. It was actually being used to transact, so peer-to-peer money transfer. You know, from where it was in 2007 with Safaricom to where it is today, you've got in Kenya 40 million people that use M-Pesa. Anywhere you go, from Nairobi to the rural areas, you'll see literally painted on the wall green with this sort of box, M-Pesa. So it's embedded into their society.
Is it fair to say it's African Revolut?
It's pre-Africa Revolut in reality. And but if you look at the numbers, you're talking 87% of the country use that, and it's 100 million transactions a day, which is insane. There's no other Revolut or neobank that does anywhere near those numbers.
And maybe coming back to the technology, I think it's really essential for our listeners to understand the difference because it's all pre-digital era per se, because actually the M-Pesa initiated the service as a USSD messages. So you basically have the regular old phone with a keyboard and numbers, and to initiate the transfer from one person to another one, you just need to know the phone number and know the amount that you would like to send. And it was enabled even before iOS and Android popped up on the market. And do you think that's the most common way how people are right now using their services in Africa, or it's shifting more to digital applications mode?
It's twofold because Africa is a huge continent and it still remains very fragmented. The telcos provided a platform to get people progressively using their devices, but feature phones are still a major part of the African continent. Smartphone penetration, of course, has ramped up, but the biggest challenge for a lot of people on the ground is affordability. Some companies now are developing, there's a company in Kenya called M-Copper, and M-Copper has now got something like 6 million customers. But what they did was build the first mobile phone factory, the biggest of its kind in Kenya, and they've embedded financial products into that and said, okay, here you go. We're going to give you access to credit. We're going to give you access to ID and the ability to actually get onto the financial rung, the ladder, because so essentially you're empowering people at scale to do something which was beyond them in an informal economy.
Right now, I would say we have 10,000 feet overview. So we understand it's a huge market, but a lot of underserved people. We see that innovations came even before the digital era on the mobile phones, like with USSD messages and ability to send and transfers. And let's then circle back to your product. So we have a setting, we have a context. What was the idea initial and what was the trigger for you to jump into the founder mode with the startup, taking all the risk and accountability for this project?
When I first started my first company, Cloud Africa, years ago, it was a leap of faith, but I was kind of protected because we had, I started the business with very senior decision makers. So one of the people involved, he was the son of the chairman of MTN, for example. So it wasn't a case that I was, jumping off the building without a parachute. There had to be something in place there. Over the years, what I saw in terms of my experiences across Ghana, Nigeria, Kenya, Africa takes a long, long time if you want to build anything of value. But why I started Indelible was really a personal passion for nature and biodiversity, because I think remittances as a business model, it's become very crowded.
Yeah.
You need to have a lot of capital in the bank to be able to do customer acquisition, so marketing. And there are companies out there like Remitly and World Remit, and you can check on the accounts. They spend between 80 to 100 million a year purely on marketing. So for me, nature is a personal thing. I grew up as a kid. I had the chance to, I even got it today, I had a chance to go to Kenya, experience what nature was really about. And we're in a stage now, I think, in the world where I think more and more entrepreneurs and founders have to focus on what's really important beyond just hand-to-mouth remittance consumption. And that's why I've launched Indelible. It's really to try to drive financing towards nature.
As I understand, the first stage is actually the crowdfunding. That's one of the really popular models here in the United Kingdom and European Union. You can see a lot of businesses, actually, they go in crowdfunding first before even with the institutional VC. So how does it work if we get into the African context?
When I launched the crowdfunding app initially, it was more of a test. Can we do this? And it wasn't a case of can we build a product, because product can be built. But as I saw with previously with remittances, crowdfunding, you have to go through a number of regulatory steps. So, dealing with the FCA, I had 3 meetings with the regulator here, insisting I need to be licensed. Because we had integrated what was a reward-based model, enabling digital airtime payouts, gift cards, they just said to me, we don't regulate reward-based crowdfunding. And you kind of leave, you're scratching your head thinking, okay, what do I do now? But we built it anyway. Yeah. We knew that we were fine to start. In the African context, and this was down to my track record and networks, I had a meeting with the governor of the Central Bank of Ghana, and I introduced it was an idea then, it wasn't even developed. And I said, look, we're developing a service that's going to go beyond remittances and drive investment into Africa. Within 5 days, I'd already had the sign-off, and the central bank had approved my product.
Nice.
So that gave me a head start. But then comes the big challenge for startup founders. It's how do we onboard customers? As I said, customer acquisition is super expensive. So hence why we moved towards the embedded solution.
And maybe to highlight once again to our listeners, by pricing for acquisition, in my opinion, it's not always like paying someone to join. It's basically building the business process when you are attracting the proper clients who are ICP, ideal client profile for your business, and not attracting another business or another customers. And do you find it's hard and challenging to build the business processes for attracting customers? Because if we take a look, I don't know, just to give an example, Revolut, everyone knows that their acquisition is pretty aggressive. Like on the initial stages, if you employ, you have to bring on the trial period, you had to bring 200 friends to be on board on the platform. And do you see the difference, or how do you operate on the market and how African market? Because definitely people are not sometimes using the mobile applications, either using social networks. What are the ways to attract the potential customers?
The marketing and I see tech as being a marketing challenge now, because products are much of a muchness. It's very difficult for founders to stand there and say, well, we've got this USP, because it's a surefire guarantee someone else has done the same thing. What I found with the crowdfunding model, because it was deemed, number one, it's deemed high risk. Number two, onboarding, whether you're using online marketing to acquire new customers, it's super expensive. The numbers, for example, you could be spending between 30 to 100 pounds per person just to acquire a customer. But then what? You then have to get them to contribute towards the projects. And what I saw, it kind of blew my mind, because the projects that we have on the app, they include some of the most iconic nature conservation stories on the planet. So in Kenya, I've been as a kid, or not a kid, but got to an age where I was just contributing and donating to projects. There's one called Opajeta Conservancy. It's home to the last 2 northern white rhinos left on the planet. In Uganda, we're working with the mountain gorillas at Bawindi. So I've handpicked these stories, but it's still very difficult to get people to contribute.
But right now, I think the digital space is overcrowded. Like with all those easy dopamine, with the TikToks, Shorts, Instagrams, it's really hard to get people's attention, even if the idea is really good and really benefiting to the nature and our well-being as humanity. So did you find the way how to break through this wall of the noise from the easy dopamine?
Yeah, I found the right way to break the noise by going directly to the companies and organizations in Africa that have a long history and a track record for essentially putting a story in front of people, attracting the right types of investors. As a startup, again, we're at the stage of growing, and if I had £1 million to throw into marketing, I know then that we'll have traction. But I realize that, for us to be relevant, and the real opportunity is not to have another app, it's actually to embed something at the checkout experience. So whether people are paying for airtime, or they're paying for their bills, or they're paying for food at a restaurant, I want something that will say to them, like, Pay by Bank in the UK, which has exploded. I came up with the idea of, why don't we have something like Pay to Nature?
Yeah.
So people are constantly seeing it and thinking, okay, 10 cents, 50 cents, $5. I can say now, the banks that I've spoken to and the telcos, they've seen it and they've thought, okay, you've got something. So I think I've moved into a point where there's bigger opportunity and less risk in terms of outgoing.
So we're naturally coming from crowdfunding platform into the payment gateway, and maybe just to give more understanding for our listeners, like, what is the structure? In this case, when I'm spending the event somewhere in Kenya in restaurant, and I would like to pay through the mobile application or digitally. How does it work? Is it integrated with the POS, like a point of sale terminal, where I'm trying to use my card, or I'm paying online?
It's going to be a digital first experience. So how we've done it, it's a business to business opportunity and a SaaS model. So we're working with 2 very big banks in Ghana. They've jumped in very quickly. And for example, you're the head of sustainability at a bank. You'll be given a corporate dashboard to log into Pay to Nature. They go in, they will identify sustainable projects or climate or nature projects. They will onboard those projects. On the other side, they will have embedded checkout experience, a widget or code that will then go into a website and their client's website. So ultimately, consumers are paying for services, and they'll see the opportunity to, it's almost a micro contribution towards that project. And the flow will basically mean, I pay for my dinner, I've contributed $5, and that $5 goes to the bank's nature project. And by doing that, we're just then reducing our risk by not getting involved in the KYC, because the bank will deal with it. We're not doing the marketing, because the bank will deal with it. And it ultimately becomes this sort of, we hope, a virtuous circle where banks have got to report on nature. It's it's a risk to businesses as a whole. It's 55% of global GDP. So now more and more are realizing the best way for us to do this is by having a solution that will get us moving towards financing, reporting with real-time data, and not just greenwashing or box ticking, which is really, it's prevalent, I think, everywhere at the moment.
Yeah, there are a lot of services, not even in the services like a digital banking or even airlines, you can pay for additional carbon emission or something like that. Maybe you can share with us certain numbers to understand the scale, like what you take it and how it's implemented and how it's performing.
Okay, well, the product is new. So we are launching officially our pilot with 2 of the banks in the next couple of weeks. In terms of the model, as mentioned, it's going to be SaaS-based, so we'll have an entry-level price, but then the enterprise level. In terms of the enterprise pricing, that's to be discussed directly with our partners. So I can't provide sort of pricing on this podcast, but I'm sure.
So we'll include the link to in this episode to your website, maybe.
Yeah, no, absolutely. I appreciate that, and I think ultimately we know that these sort of first 2 banks, and then working with the telco, is going to be our platform to really just showcase to the market that this is literally a market first. And what we're seeing is not, and this is good for myself, but it's almost like a FOMO of banks are realizing, okay, this isn't climate, this is nature. What does it actually mean? And so getting businesses to sign up it's been interesting. But I've, as I said, 15 years of experience in Africa. You get a certain amount of buy-in and leverage from decision makers as well.
I'm maybe more interested into the product numbers or your assumption. Like from the product perspective, sometimes you kind of do projecting like, okay, what are going to be the minimum numbers or what we would like to achieve to say that we are successful? Maybe some metrics that you have in mind that you can share with us.
Yeah, absolutely. Within the sort of next 3 years, we would be looking, with this service alone, we would be looking to be driving in Ghana between £3 to £5 million in terms of revenue. Those are baseline projections without marketing and based on the number of businesses that we will sign up. We're looking at around sort of between 30 to 70 businesses within year 2. And beyond SaaS, we will also be looking at transaction charges. But of course, for stickiness at the start, we don't want to sort of confront consumers with those costs. But later, we're not a charity, so we need to sort of self-sufficient business going forward.
And in terms of maybe infrastructure, because what I see with emerging markets is always more challenging in terms of the technology, because I don't know, in the United States, embedding SDK in the mobile application sounds like something doable, but sometimes it's a challenge to proper build the infrastructure and integrate it with the third parties. So how do you see this part? Is it challenging for you to expose your APIs, integrate with the banks, and then go through the acquiring process? Because basically what the end customer will see, some kind of interaction through the acquiring. When I'm paying with the card or through the M-Pesa mobile number, I will see an option to donate to pay to nature. And then how it will work from the technology standpoint. Is it hard? Is it, because maybe someone is going to launch products on the African market, and it will be really good to know.
The key thing for any person going into the African market is you must be working with the telcos. Without that, you don't have a hope. We've already onboarded with MTN, and MTN, it's the biggest network operator pan-Africa. We're starting with Ghana. What a lot of the telcos are doing is now they're spinning off the core business into a fintech arm. So what MTN is affectionately known as MOMO, MTN MOMO. So any Ghanaian or Nigerian will talk about that. And what they provide you are access to the APIs, checkout products and tools. And we've had the opportunity to discuss with them. We've been onboarded, and beyond just taking their APIs, there are discussions happening around potential partnership, an investment, because if we can work with these brands to say MTN is pay to nature, it's the first of a kind, there's an opportunity. But beyond the telcos, there are processors and payment gateways out there. So again, companies like Paystack, which was acquired by Stripe, Nigerian company that is West African, they offer all kinds of solutions and APIs for companies that want to get traction in these markets. There's a company called One Afrique, which was previously MFS Africa. They connect to over 200 million mobile wallets through all the banks and telcos. There are other companies out there, Stitch in South Africa. There are lots of options for people that want to go in, that want to reduce the risk of multi-market entry, and they just need to look very closely at what's the benefit, what is the cost, which markets do I want to start in first. But what I would suggest to any of the people looking into this podcast today is think about the interoperability, because that's going to be key. Because Africa, as I said, is a huge continent. And I would always say, if you want to start somewhere, my advice is go to markets like Ghana, because what they've done, even ahead of M-Pesa, was MTN and the central bank there, what they did was say, okay, through something called eSwitch, is to provide a solution which will connect you to all the banks and all the telcos. And it's been highly successful in terms of uptake. So just do your research, but make sure you pick the first market with a view that's your home base, and then grow from there.
All this thing I bring in the thought that is the competition over the banks and telcos is finished, because it sounds like in the African region, actually telecom is playing fintech role or the digital banking role.
Telecoms is ahead of the banking, and the banks work with the telcos. So it all comes down to for the banks, it's about, we don't really want the telcos dining at our table, but we need them because they have the subscriber base. So it's really an intertwined relationship now. But also the infrastructure challenges. To give you an idea, Africa relies a lot on agency model. So you have there's something like 28 million mobile money agents across Africa. 10 million of those are active. But again, in rural areas, we don't have infrastructure. You're essentially providing people with the opportunity to earn an income, and they will provide a service, which means that perhaps I live in the outskirts of Nairobi. I can't get to a bank, but I can go to a mobile money agent. The banks need the telcos. It can't be any other way. And as I mentioned, there's like 300 million people that actually have a formal bank account, and the rest is mobile money.
It sounds like a maybe similar analogy to internet providers. Like digital banking doesn't exist without internet providers. And it seems that telecoms in Africa is kind of doing the same. They're serving the last mile to the client. And sometimes by being the only one who's sitting on the last mile, they have an advantage. And sometimes they're providing the kind of digital banking-like services there. Okay, it's clear. Maybe another question, like, it sounds really interesting and fun to implement, but what are the challenges that you think still exist and you will have to overcome in the next years?
Well, the big challenges are very similar, actually, in some ways. Some of them, in being in somewhere like the UK or US, you have to be very mindful of compliance, KYC, and you need to understand the regulatory landscape. So before going into any of these markets, there's this assumption that it's Africa, it's the Wild West. It doesn't work that way. In fact, the central banks especially fintech, they take it so seriously that you need to be able to ensure that you get your licensing in place, understand what is the required capital that I need to get moving. Other issues, of course, things like cybersecurity and fraud. These are prevalent across any emerging market. There's no getting away from that as well. And also having a localized presence, because without people on the ground, the idea that you can just pick up the phone or have a VoIP call or a WhatsApp and be able to launch a business, it will take you, and trust me, I've been there, it will take you years. It took me 10 years just to get to a point of thinking, I really understand what I'm doing now. And if you can't be bothered to travel, don't bother doing business there, is my...
And I think we can take it to another level, like a cultural match is essential part of the business. And I've seen a lot of cases when it fails on the B2C side, like one of the cases when N26 came to UK market with the liveness check without proper even noticing to end customers. And there are a lot of examples when the product fails on B2B side, because there is a huge difference how the local perception works, or the product has been built for another cultural approach. So that's a good one. I really like this one, and we are discussing it through the episodes. And another question in terms of the scaling, because most of the startups here, they rely on cloud infrastructure. And with Africa, I think it's kind of hard. You said about fragmented audience, you challenges even with the simple internet access. Do you find this part scaling as a technology challenging in Africa region?
It is a challenge, but then in terms of cloud infrastructure, we do have access to that as a UK company, and that's what we will work from as a UK company. If you're in the continent, there are solutions out there, but scaled predominantly as if I were an African trying to build a business, the challenges for somebody in the market are a lot bigger than for, let's say, an outsider that is coming in who has access to potential resources that don't exist. So those challenges are there. But as I said to someone the other day, he's a good contact of mine in Kenya, an entrepreneur and a founder, and he's really built something that I think is amazing. But the challenge he will always have is something I refer to as a glass ceiling, because it becomes very politicized in terms of, do I really want to give someone in my backyard an opportunity, even though they've got an amazing product, or shall I just take his idea and build it as my own because I can do it? There's a lot of advantages coming in from the outside, but you need to spend time with understanding the local landscape as well.
I think we have really good overview from your side about your product and current state of the Africa. And we are shifting to our final section, which is book recommendations. So we had a little bit discussion before the recording. So can you give us the book that you think you can recommend to our listeners?
I would highly recommend a book called The Sixth Extinction, An Unnatural History by Elizabeth Kolbert. It blew my mind, frankly, but it also resonates with me because of what I'm building now. And I think, look, at the end, we're all founders and entrepreneurs. We're all seeking something that is commercially successful. But I'm really motivated by what's happening on the planet in terms of nature and biodiversity loss. And her book really delves into what's coming, what is happening and what's coming. And there isn't any happy ending to the book, which is what I think you'll leave once you read it thinking, okay, what am I really doing? And I think founders need to question that sort of what if beyond just thinking about ARR, and becoming the next Revolut, because those markets are crowded now. Think about, if you're coming into fintech, think about what can I do beyond remittances that's going to solve the infrastructure challenge? Just to give you a statistic, I mean, in West Africa, by 2050, or in Africa, 1 in 4 people will be African on the planet. By 2050, you're going to have 700 million people in West Africa alone. Yeah. And without infrastructure, without nature or biodiversity, you're not going to have business or opportunity.
That's what we see from a lot of even product companies. Like, let's scratch the digital products. But Apple, the mission is to drive the green, renewable energy, et cetera, et cetera. So I think that's one of the required item in the company mission, how you actually drive in the change on this planet, because we have only one planet and we cannot change it.
I would argue very strongly that because of the Trump effect, US companies and others have begun following suit. They're exiting their sort of agreements around climate change, but nature is almost decoupled towards becoming its own standalone, and how we treat sort of nature and biodiversity. It's not just about, the rhinos in Kenya. This goes way, way beyond that. So I just see that as such an important risk and opportunity that I think fintech founders really should consider. What can I develop that's going to really help and go beyond immediate, as I said, hand-to-mouth consumption, which is what remittance.
Tactics versus strategy, like what we have on the tactics level, but what is our business really on the strategic level? And that's a really good one. Thank you for this book.
No, but pleasure to share it.
And today I would like to share my book too. It's Intelligent Money, How Finance Will Change the Era of the Digital Currency. And basically that's a book by Chris Skinner. And actually it's given a really good projection how in 5-7 years the money will become more invisible a part of embedded finance, because I don't know, give an example, go into airlines when you're trying to check out, I don't know, your booking, you kind of see the integration with the banks. And instead of going through the card, you can actually pick up your account and then use the balance from there. So the book is trying to predict the future by having a more seamless, less frictionless interaction as a customers with the money. So let's see if this prediction will work well. And thank you, Rajesh, for coming today. It's really lovely discussion. And thank you for your time, giving us such insightful overview of the African market and your product. And we're looking forward to have your product on the market and see the updates from your side with the numbers. Thank you for coming.
Thank you, Igor. Thanks for your time.